Welcome to today's section. Today we'll be looking at what is PEEP. Before I start, please do me a favor by hitting the subscribe button, hit the like button, and also leave comments if you have any question or any information that you want to know. Now, without wasting much time, let's get straight to the content of the day. So today, basically, we'll be looking at what is PEEP and how to calculate PEEP. In forex markets, all we deal with is PEEP. The PEEP is what makes us the money. So let's go straight to knowing what we mean by PEEP. Now, in forex trading, a PEEP stands for percentage in point or price interest point. The PIP stands for percentage in point or price interest in point. Now, it is a standardized unit of measurement that represents the smallest price movement in currency pairs. So the focus is the smallest price movement in currency pairs. The smallest price movement in currency pairs. We'll be looking at how to calculate that very soon. Now, a PEEP is typically expressed as a decimal point, followed by 2 or 4 decimal places. I take that again. A PEEP is typically expressed as a decimal point, followed by 2 or 4 decimal places, depending on the currency pairs. Quoting conversions. For most currency pairs, 1 PEEP is equivalent to 0.001. That is those currencies that deal in 4 decimal places. And we also have the other one that we trade in, the PEEP running 2 decimal places, which are the yen pairs, the Japanese pairs. We'll be looking at them very shortly. However, there are exceptions, as I said. However, there are exceptions such as the Japanese yen pairs, where 1 PEEP is equivalent to 0.01. So over here, you see that the PEEP movement is in 2 decimal places, but over here, the PEEP movement is in 4 decimal places. So the Japanese yen, any pair that you are trading again with the Japanese yen, you should do your calculation in 0.01. So any movement that occurs by 0.01 is 1 PEEP movement. But when you take the other forms of pairs, other currency pairs, we deal with them in 4 decimal places. We have other exceptions like gold, oil that are traded, and their PEEP movement is different from this. So the main purpose of using PEEP is to measure and indicate the exchange, the change in value between currency exchange rate. In a previous video, I told you about fluctuation in currency or fluctuation in exchange rate. So today we'll be looking at that into detail. So as you can see, the main purpose of using PEEP is to measure and indicate the change in value between 2 currency exchange rates. It helps traders evaluate and calculate potential profits. Now, let's look at how to calculate PEEP. Now, let's consider an example to better understand the concept of PEEP. So, first one, suppose we are trading the euro versus or euro against the United States currency pair, and the current exchange rate is 1.1234. So the focus is here, 1.123. So this is the current exchange rate. Now, if the exchange rate increased to, the focus here is 2, increased to 1.1235, it means there has been a 1 PEEP movement to the upside. There has been a 1 PEEP movement to the upside. So you see that the last 4 decimal number, which in the exchange rate, which in the exchange rate change to this last number 4 change to 5. So it means that it has increased by 0.0001, which represents 1 pip movement. Represents 1 pip movement to the upside. To the upside. Now, similarly, if the exchange rate decrease or reduce to 1.1233, it indicates 1 pip movement to the downside. So what we are talking about, we are still using the same exchange rate, but in the second example, we are saying that it has decreased. It has decreased to 1.1133. So the last number, which is 3, which is 4 from here, has changed to 3. So there's 1 pip movement to the downside. That is what it means. Now let's take another example. Suppose we are trading the GBP USD currency pair and the current exchange rate is 1.2235. Now, if the exchange rate increase to 1.2245, it means there has been a 10 pip movement to the upside. So you can see that the exchange rate, which is 1.2235, has increased to 1.2245. So what is the movement there? You see that we have the last 2 digits to be 35. But when it comes to the increase to, we have the last 2 digits to be 45, meaning there has been an increase. It means that there has been a 10 pip movement to the upside. So you just subtract the exchange rate from the new exchange rate, because they say it has increased to this level. So you subtract the old one from the new one, then you know the pip movement that has occurred. As simple as that. Now, similarly, if the exchange rate decrease, we are using the same exchange rate from this example. If the exchange rate decrease to 1.2230, it indicates a 5 pip movement to the downside. So you see that we have the exchange rate to be 1.2235, and it has decreased to 1.2230. So the pip movement is the last digit, which is 0.0005. So it's 5 pip movement. Remember, we are dealing with the currencies that the pip calculation is in 4 decimal places. So you see that the exchange rates are in 4 decimal places. So if the rates are in 4 decimal places, that is when you use the pip calculation in 4 decimal places. So that should be your focus. To focus and know the currency that you are dealing with. Now, how to calculate pip? We are continuing. Now we are going to look at some other examples. Now, when dealing with a currency pair that involve the Japanese yen, the pip calculation is similarly different due to the yen's low value compared to other major currencies. In this case, the pip is in the pip is in sorry, the pip is sorry, this means that the pip is in 2 decimal places, which is 0.01. So you'll be looking at the 2 decimal places when you're dealing with Japanese yen pair currencies. The pip calculation will be in 2 decimal places. Now let's consider an example using the United States dollar versus Japanese yen pair. So assume the exchange rate is 109.85. If the exchange rate moves from 109.85 to 109.86, it means there has been 1 pip movement to the upside. So you see that the two decimal number, which is this one, the 5, has changed to 6. So that is 1 pip movement. That is 0. The difference will become 0.01. That is 1 pip movement. Now, so Japanese yen, that is how we calculate pip. The pip calculation is in 2 decimal places. So let's look at another example. If the exchange rate moves from, we are using the first exchange rate as an example again, 109.85 to 109.84, meaning there has been a decrease of 0.01 pip movement. As I said, it indicates 1 pip movement to the downside. You can see that clearly. So all you have to remember here is that when you are dealing with any currency pair that involve the Japanese yen, the pip calculation is 2 decimal places or 2 decimal places. So your focus is on 2 decimal places. Now, when you are calculating that and it happened that it's run above the whole number, meaning you have entered into 100. You know, in a primary school, we learn about ones, tens, thousands, 10,000s. So when you cross the decimal point, it means you are in what? 100. You are in 100 in that order. So you should take a currency pair and practice the calculations to get more understanding. Now note, understanding the pip calculation for currency pair involve the Japanese yen allows traders to accurately assess and manage their risk. So this doesn't only apply to the Japanese yen. You knowing how to calculate your pip will help you manage your risk and to know when to exit for how much to risk in the market and to set your profit target as well. They determine position sizes. So the pip calculation also help you determine and calculate potential profit or loss when trading these pairs. Now that brings us to the end of today's section as well. Pip calculation is very, very simple. What I would like you to do is practice, take the currency pairs, practice, and do the calculations yourself to understand. If you have any question, please leave it in the comment section. I'll be happy to respond to it. Do me the honor by hitting the subscribe button for me so that next time I upload a video, you will be notified. See you in the next video.